The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We get the S&Ps, all the markets slightly in the red this morning. S&Ps off about 0.5%. You're negative by 19 points right now, trading at 4,016. NASDAQ 100, you're negative by 82 points, 11,851. We almost made it to a 12,000 handle yesterday, just off that level this morning. Dow off 156. You see it, Dow, about 33,900 yesterday, 33,571 this morning, and you got the Russell off about 8 points. That's about 0.5% as well. So all the indices pretty close to 0.5%. NASDAQ 100 down a little bit more than that, 0.7% in the red. Crude oil, little volatility in both directions. You see the volatility into 430. We're a buck higher off of the lows right now at 81.80. We were just trading above 82. Gold makes it to 1943 overnight. We're trading at 1931. We jumped to notes and bonds, just kind of chopping around in the past since about 820 though. See the volatility we just got up to almost 115. We're back to 114.24. Still right now you're talking about the 10-year. And where are we? We're talking about a yield just above 3.5%, 3.51%, the yield on the 10-year. And that is 1 week out from a Federal Reserve meeting that begins 1 week from today. We get the announcement 1 week from tomorrow, February 1st, 2 p.m. Eastern Time. We got some economic data before then, man. We get Microsoft earnings today after the bell. We already got some companies out with their numbers. We get PMI at 9:45 a.m. this morning. So that's in about 35 minutes. We'll be on the air for that. We also get PCE later in the week as well. GDP for the fourth quarter of last year. First estimate from the Commerce Department of GDP later in the week. We'll talk about some of that. But some big numbers out this week. You jump over to the VIX. 2016, up about 35 pennies right now on the VIX as we chopped around yesterday. Quite the volatility yesterday in the markets as we saw in the VIX, reacting a little bit under 20, above 20. But boy, you take a look at this thing on a longer term basis. Pretty muted volatility index, man. You got to go back to December 2nd, right? We haven't made it above 24 barely. And you look at the most of 2022, and we spent the better part of most of that year over that price level in terms of 20. We'll see if this year has different things to come. But right now, the VIX sitting at about 20 and comfortable at that price level. And let's do some currencies. Dollar index. That's a daily. You talk about a pullback. Now check that out, right? And it's an art, not a science, folks. Where do you put the top? Do you put the top of this Fibonacci retracement that's possible at the very tip of that bar? Do you put it at a little bit of a linear regression that formed that top that we had basically from September 26th to where the sell-off began October 21st? You could make the case that the sell-off really began about November 3rd on that sell-off. But nonetheless, you see, we're right back to about a 618. Pretty remarkable, and that's a full year, right? You trade from 95 to 115, and just like that, we've given up the 618 of the dollar index. And yeah, we got 618s in a lot of different areas, folks, in this market. ES to some degree. What else? I had it on one other portion. Now, the gold contracts climbed all the way to the 786. And again, where do you take the top? You could take it up here. And if you do, okay, you see how that changes things slightly in terms of where that 786 lines up. You take it to the tip in terms of where we are. You push this one down here, and you're still well above the 618 on that gold contract, man. It is quite a run on gold. Looks like it's aiming for 2,000, man. But boy, it has been quite a run, even at the pullbacks that you get. Just for some examples, I mean, you want some volatility, man. It's been a one-way trip, and these trips, you know, momentum is something. But boy, even a 382 retracement right now on gold would bring you to 1817, about $115 from where we're trading at right now. Speaking of big retracements, man, Tesla has been on quite a run. Now, you almost can't see it on this chart because it's been quite a run over the last 3 years. But COVID lows, $27, up to $415. We've backed off to a low of 100. And just zooming in on the recent action, folks, from the volatility we saw in December where this thing just traded from 200. So this is the most recent acceleration in terms of where we are right now. Now, Tesla's going to open down a couple bucks with the market, so you're back at about 141 right now. I remember talking about on some of these first accelerations, just saying, be careful here because the move has been so fast, so swift on Tesla that you're going to get some volatility, and even a 382 brings you up to 138 and a 618, 161. And that is just from the move on December 2nd, folks. And you could make a very real case that it was pretty much a one-way trip from where we were, what day is that, September 20th or so? And taking a look at that Fibonacci number on Tesla, just to put things in context here. All right, just a 382 with a larger move, taking the smaller one off because we covered that one for some clarity, 182. And that was a run from 312, September 21st, all the way down to 100. And folks, that's not even cherry picking when he went after Twitter, okay? Not even cherry picking when he went after Twitter, which was this high up here, 382. So you take the 310 high, and you're talking about a move that could get you to 182. That'd be where it chopped around at basically November to December before that second acceleration began on Tesla shares, but nonetheless, you can open down about $2. But boy, you are up about 40% off the lows for Tesla. I've got an article out there somewhere that I was looking at. I think I have it pulled up, talking about this month could be one of the best for Cathie Wood. Well, folks, context is important, okay? There's what the chart looks like from the COVID lows. So when you're talking about your best month ever, is there a celebration party going on at the ARC headquarters in St. Petersburg, Florida? I don't know. That might be a tough one, even on a 5-year basis, all right? You want to go back even further. Context, very important, folks, okay? Because this equity, you're talking about being down over 5 years from still at this price level. So be careful of these headlines. Let me see if I have it pulled it up. Where is it? There it is. ARC is well on its way to its one of its best months ever, up 22%. What do I always say, folks? Percentages on small numbers can be deceiving. I mean, to show you where they're zooming in on that month, sometimes it just lines up well, man. You came into January at $30. You're going to finish up about 30% at near $38 right now. Timing is everything. Nonetheless, what have you done? All you've done is got back the losses that you had since December 13th or got back the losses you had since December 2nd. It's just been such a tough run. So don't let those percentages, those headlines deceive you when you say, we out of the woods here? Maybe we're out of the woods because, boy, Cathie Wood, she's turned it around. She's having one of the best months ever. Well, if your stock drops, folks, from a price point of 160 to $30, eventually you're going to get a pop, and that pop percentage-wise is going to be a big number when you're dealing with lofty numbers on a 5-year basis still at negative prices for ARC. Yeah, pretty wild, man. All right, what else do we have going on? Talking about headlines, we got Microsoft after the bell. Let's talk a little bit of Microsoft as we come into this. Microsoft, some of the numbers in here, pretty interesting in terms of what they're talking about for Azure, for growth. Analysts expect Azure sales to increase 34% at constant exchange rates this year and slow to 27% in 2024. Part of the reason why you've seen some of the problems there at Microsoft slowing growth. After slumping 29% last year, Microsoft still trading at about 23 times projected earnings, just above its 10-year average. So if you see some slowing, that's where things can get a little interesting. All right, folks, stay tuned. We got the S&Ps down by 20. We got the NASDAQ 100 off 79. We got the Dow off 158. A little bit of negative price action to kick things off. Stay tuned, folks. I believe we're coming back with our man Kevin Hincks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&P futures negative by 20 points right now. That's right at about 0.5%. You get the NASDAQ 100 off about 83. That's about 0.7% in the red. And you get the Dow off about 0.5% as well. Let's jump over to our man Kevin Hincks, folks. Every trading day, 12 noon Eastern time, right here on Tiger TV, the TD Ameritrade Network with Fast Market. Your host, Kevin Hincks, Tom White, the whole team at TD Ameritrade Network, folks. They get some great guests. They walk you through hypothetical trade setups. They're talking about options. Every trade setup that they have, folks, has defined risk. Can't overstate that one in any portfolio. And we jump into a pretty big week of earnings and economic data. Let's get into it. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yep, mega cap tech starting off the trade this week with Microsoft earnings after the bell today. It's going to be the story of the day, Tommy. You're going to get tired of saying that name by the end of the day. But Microsoft after the bell today and Boeing before the opening tomorrow morning, those are the two big stories heading into a Tuesday, Tommy. Obviously, some of the earnings that came out this morning, GE, Johnson & Johnson, 3M, these are all names that are moving. On the downside, Lockheed Martin's the only one on the upside. GE was up early in the day, now it's down. 3M, a big miss. Johnson & Johnson, Verizon, both down just a bit to start the day, Tommy. But, you know, we've got back-weighted economic data. We've got high-profile earnings coming out this week. So in terms of earnings season, Tommy, we're waist deep right now.
Yeah, pretty cool, man. I got Microsoft up there as well. I was jumping around to some of those other equities as you were mentioning them on the Thinkorswim platform. And a little bit big picture, Kevin. You know, we're coming into some pretty important times right now with the S&P over 4,000. The futures, I have it up on the Thinkorswim platform, 4,056 yesterday. What's your general take on this market as we come into not only some huge earnings, man, because we got this week and we go right into it next week with the rest of those mega tech companies. But then we get the economic data and we got Federal Reserve a week from tomorrow with an announcement. What's your general take with this market sitting pretty comfortably, I'd say above 4,000 right now, considering some of the risks out there that are staring us down.
Yeah, we're at a pretty dicey level. And, this market has had a nice run up to these levels, Tommy, but in terms of technical analysis, we're at a pretty significant level right where we're at here. So this market needs to hold here, and Microsoft's earnings, that'll be about layoffs and investments in the companies that they're talking about, and on 10,000 layoffs. I think when you look at a company like Microsoft, you got to look for Azure growth. Is it reaccelerating? You look at digital ad spend. Those are the things that Microsoft's going to be heading towards. And then you're right. We're in a blackout period right now for the Fed. So there's no Fed speakers, and you've got that January 31st, February 1st Fed meeting coming up on the horizon. But we've got inflation data Friday. We've got the first look at fourth quarter GDP and durable goods on Thursday. That's pretty important. There's a lot going on this week, but as you know, Tommy, during earnings season, this is a big market made up of a bunch of individual stories, and that's what earnings season is until we get some hardcore economic data coming out late in the week.
What do you think of, have you tried Chat GPT, Kevin? I mean, it comes up, of course, so Microsoft's got the deal. They've been involved with OpenAI, I think, since 2019, a couple funding rounds in there, and it looks like they make a big splash into that. What's your general take, pretty early, of course, on how that plays out, but pretty exciting stuff. I was playing with that yesterday, played with it. Have you tried out Chat GPT yet? I
have not tried that out, Tommy, but this is Microsoft's third investment in this OpenAI, this chat bot, the AI-powered chatbot that they're investing in. So, yeah, a lot of people think that AI, that's where this economy and that's where this market's going. And, with Microsoft, think about what they're doing. They're buying Activision. They're getting heavily into gaming. They're investing heavily in the AI. So Microsoft, forever, if you like them, if you hate them, that company is a massive company that continues to evolve. So I think their earnings today will drive the market tomorrow for the day. That and Boeing, of course. So, yeah. No, I have not tried Chatbot, but I understand what it does, and, a lot of bets being made on the future of what's going on in that area.
It's pretty cool, man, when you think big picture in terms of, 5 years, man. It's hard to predict what's happening, right? 6 months or a year down the road. But even in 5 years, my son, Kevin, he's going to be 2 in what is it, a week from tomorrow, something crazy like that. Now, boy, you talk about what life's going to be like 15, 20 years. I know you have kids as well. But it is pretty remarkable when you think about, when you combine it with the Azure, I'm going big picture, folks, but it's something where, you're building a website, you're on their cloud service. That type of chatbot, and it does so much more. It would be remarkable to see how it could become, build me a website that I can sell newsletters and pretty, et cetera, folks, let alone just the amusement of trying it out. But Microsoft after the bell. With that in mind, Kevin, you mentioned 2 of the equities you may be talking about, but what are you guys talking about on Fast Market coming up at 12 today?
Yeah, Microsoft and Boeing are trades that we'll be making. Lightfolio is going to do a presentation on Coinbase today. So We'll be looking at, obviously, these 2 large companies, one industrial, one mega cap tech, and then Coinbase in the middle section. So a full day of programming here on Fast Market.
Boeing, quite a run, man. I got it up. You got a double bottom last year in about the 120 range, and boom, just like that, man, you're trading at 209. Quite a run from those lows that we had in October. Can you give us a little teaser on your feelings on Coinbase? Because this one's interesting. I was reading an article this morning, Kevin, on Bloomberg, talking about that some wallet at Binance had combined something of funds that had to do with customer funds and some of the money that had to do with the tokens. Point being, very tough to know what's going on in some of these crypto worlds right now. Coinbase off of the lows of 31.55, but boy, you talk about off of the highs at 55. Give us a little teaser on your feeling on a company like Coinbase, and man, what's going on with crypto right now?
Tommy, I am very hesitant to still even dip my toes into something so fraught with systematic risk as cryptocurrency. So I don't trade it. Full disclosure, I do not trade it. We'll look at these companies that are involved in it, and we'll make sure that our viewers know that this whole industry is fraught with risk. You see it playing out. Yet, That being said, Bitcoin has rallied from 16,000 to where it is now, over 22,000 now. So, I mean, an incredible rally despite all the problems in cryptocurrency across the board. So I understand the trade going on in cryptocurrency, but I also understand the incredible risk involved in this, Tommy.
You said it well, man. Well said. Systematic risk for sure. And I pulled up that headline, Kevin. It's Binance acknowledges storing user funds with collateral in error. Folks, these are unregulated offshore exchanges. When you put it as simply as that, people sending their customer funds to unregulated offshore exchanges. Take that for what it's worth. We all try and categorize the risks that we go through. I'm adding my opinion in this as well. You can trade it, as Kevin said, man, but you better categorize that risk because systematic risk is something that's there for sure, but interesting, and you want some volatility, man, almost up 100% off those lows just this year. Kevin, I appreciate the time. On a busy day, as always, we'll be watching Microsoft, Boeing, and Coinbase as we kick off some big tech earnings, man. I appreciate it, but we'll be watching at 12 today.
Thanks for having me on.
Always a pleasure. Folks, check out the program, Fast Market. Our man Kevin Hincks, Tom White, outstanding job. We're coming into some big earnings. It's my favorite time of the quarter to watch that program, man, because they got so many companies coming out with numbers. Check it out at 12, and we'll be right back for the market open, folks.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps opening up down about 22 points right now. NASDAQ 100 off about 70. The Dow off about 180 points. Pulling it up again, folks. I pulled up this Fibonacci that we're dealing with here. I mean, you're bumping up to an area, folks. Doesn't mean it's going to happen, but if you're making a trade, that's an area to get your back against the wall, man. We're at that 618, and that is from the run we started in August at 43.20. Okay, and it was an 800-point trip. Yeah, we had quite a little run in September. You took it all back on September 13th. Okay, but you traded basically 800 points to the downside. Now, I'm not even taking the tail on 3,500. Okay, so I'm taking an A to B leg of about 700 points here. The 618 gets you back to about 4,040. For simple math, we're talking about 4,000 is your price point of a consolidation of the 618. Yeah, we've gotten above it. We've gotten as high as, okay, 4180. But remember, that was on December 13th. And I believe that's when things shot up dramatically, right? Does a 20-day get us back there? No, it doesn't even get us back there. A 4-hour has to get us back there. Yeah, there it is right there. That was on the early trading on the CPI number, if you recall. So maybe a little bit of an irrational high as the early trading on the CPI number. Just keeping in mind this December 13th spike high we had there. That's what happened that day, if you recall. Maybe a little bit of an irrational high. We had early trading coming into the CPI number in the 10-year futures. That spiked markets. That accelerated things on a decent number. But guess what? You gave it back in a heartbeat. So realistically, taking that out of the equation, okay, that spike right there, yeah, a little linear regression puts you about 4,000. Okay, you take an A to B, C to D leg of about 700 plus points. That gets you in the 3,300 point range on the S&Ps. Okay, I'm going a little bit big picture here, but why not? So you're talking about potentially 3,300. Well, where's 3,300? It's about the only area you chopped around in on a one-way trip from 2174 up to 4,500. You had a slight pullback. These are weeks, folks. That's only a 4-week pullback. Okay, but we did have a consolidation from August 3rd to basically November 2nd. Okay, almost 3 months. Boy, that was quite an acceleration the week of November 2nd, 2020. Okay, what was it? Yeah, that was the election. Okay, so yeah, that was right. That was the volatility that soared from there. It's kind of the second run up. So that was the consolidation coming into the 2020 elections. Well, guess what? So I talked about 3,300. And again, we're going big picture here. Doesn't mean it's happening today or tomorrow. But the 382, the 618, and that's why we're looking at 618s everywhere. I started this off with, where was the bounce just to? A 618. Brings you down to about 3,185, maybe 3,200. Again, I didn't take the tails, right? I'm just taking kind of the bodies of that price point. But, 3,200 to 3,300, folks, depending how earnings season goes in the year that we're in, it's a realistic possibility. And as Kevin put it, we're sitting in a dicey area because there's a lot of optimism built into this market. And what I don't like to do is to tell you exactly what's going to happen. That would be easy. But the way my mind works is trying to categorize the possible outcomes and assign a probability to those possible outcomes. And in my opinion, the possible outcome that prices potentially decline from here is not being given enough of a probability by the market. I think it would be the best way to say it, with the risks that are out there. Okay? And talking about the 618s for a second, I'm going to take this larger one off just to illustrate how they are absolutely everywhere in this market. So this was the first one I just showed you, where the 618 brings us right back to basically where we're chopping around right now from the trend that we had that started in August. But I mean, check out the move that you had on 46.31 to start things off with. Number one, you could go down to the spike low that we had on May 23rd, okay? And where does that get us? That gets us exactly to the 618 of where this thing climbed to on August 17th, okay? If you take that. Well, realistically, if you go down to where we were in terms of and this is, again, staying from the move you had from March down to basically a consolidation it had in June to July, okay? And that is a consolidation that's more than a month where you kind of based at a price point of just under 3,800, little linear regression. Now, where does that lineup take place? Man, right to a 618, okay? Right to the 618. So that first acceleration we really got lower from March 22nd of 46.31, okay, and you got to go back even further than that to get every run in there, okay? This one, I think, was a little bit more than a 618 when you take that first acceleration. Yeah, I mean, even then, folks, okay, I mean, 618s are everywhere in this market right now, because even then, and, you know, it's an art, not a science. I'm zooming in on the Fibonacci number that we have. But do you see how we, first of all, we trade lower down to a price point of 4,200 and change on that spike low of January 24th, okay? And then we kind of based with a little volatility on either side of that bar, right, from a period of about February 23rd up to March 16th. Well, I'd say that's a pretty fair top in terms of ballparking, okay? Zooming in on this action, this was the first move last year, right? Market highs of 4,800 down to, boy, in January, we lost a lot of money real quickly to January 24th. You got quite a reprieve up to 4,600 and change. But the point being, both of these line up to a 618 in terms of where we are. You got there in February. You got there in March as well. You rolled over pretty quickly. And when we rolled over in March, you rolled over to the point of trading from 4,600 down to basically 3,600. Yeah, you did get one spike, okay? Taking these off it. And I'm bringing it up because it doesn't mean it's going to happen, folks, but when the market's trending like that, and you're seeing it happen right now, we're right now at that 618 inflection point that we were at a week ago to the same degree. Yeah, because that one was a 618 off the bat, and we just covered this one, which was a 618 one off the bat. And even some of the shorter trends, even some of the shorter trends in this market, right? In terms of, look at the move we had from August down to September, you got a pop, and September 13th, you're sitting right at basically the 618. I mean, you're in a ballpark area, and man, you got some volatility on both sides of these 618 numbers, but they are all over this market. We got the S&P off 24. And like I say, this year is different, okay, in terms of market risks, but it's going to take a little time to really form that new normal. And right now what I would say is we get the VIX right back at 20, and this is an area that, number one, we've struggled to go lower, and we got a lot of risk coming down the line, folks. We do, okay? We might get over them, but they're not priced in. And meanwhile, we have an S&P that's at a price level of above 4,000, which seems pretty lofty considering what we're coming into this season. But we also get PCE, which is the Fed's preferred indicator for inflation. This Friday, I believe. Thursday or Friday. We get PCE. Friday, I believe. Pretty interesting. We get that right ahead of the Fed meeting, because that's going to be an important one, to say the least. Not to mention we get GDP as well as we see that number. All right, let's see what else we got as we come into this next break. And why not talk about this story, folks? Because Kevin talked about Coinbase. Systematic risk. He put it well, okay? Binance acknowledges storing user funds with collateral in error. Hey, our bad. Don't worry. We'll make sure we try and make sure that doesn't happen again. We commingle, user funds with collateral, okay? So they have a wallet that held both customer assets and reserve tokens. They're aware of the mistake and their process of correcting it. Reserves for almost half of the 94 coins that they issue, known as Binance Peg Coins, B tokens, are stored in a single wallet, which also holds customer assets. And that's according to listings visible on its website Monday. We'll finish this up. We'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps negative by 20 right now. NASDAQ 100 negative by 37. Let's jump around to some of those companies that have numbers this morning. You jump over to Verizon. Quite a decline for Verizon, man. And we'll jump to that in a moment. Verizon right now, 39.03. You see the volatility right now. Yeah, I'm not sure that those are... Yeah, on a minute basis, I guess it spiked to 32 and to $44. Right now, we're trading at $39. You're down marginally right now when you're talking about Verizon. And we do have a caller. Let's jump to our man Mike in Ormond Beach. Mike, good morning.
Hey, Tommy. Hey, I wanted to bring to your attention and everybody else's, it looks like Newmont and another stock, QuantumScape, they were halted this morning. It looks like QuantumScape, QS, has resumed trading, but I just checked Newmont just a couple minutes before I called you, and it was still halted. I don't know what the reason was.
Yeah, I'm not sure, Mike. I mean, the chart shows it for sure. What do we got? Some volatility on a 1 minute basis, man. At the start of things, you had Newmont jumping from 47 to 60, and it stopped right now on that bar. So, yeah, it hasn't opened. And what was the other one? QuantumSpace, QS? Yeah, there's something going on between those two. My guess is some of that started to leak, and they had to shore it up. QuantumScape, yeah, it does look like it's still trading. You're down 2% after jumping around. And Newmont right now, Newmont might have just opened back up, Mike, as you're speaking. It has, and it's basically flat as well. Yeah, and I got, on the Thinkorswim platform, they have some form of news, but nothing in there today for Quantum. Yeah, nothing in there in the news on mine, and that's not to say there's not news out there, but nothing in there in the news right now on mine. And I'm looking in the den, and maybe somebody in the den if they notice anything. But yeah, that's one of, if you don't know, man, I wouldn't be touching the things if you don't know what's going on, because something's going on.
Yeah, I actually had shares of QS, and it really worked out in my favor when it spiked up high.
Good for you, man. Nice.
Anyway, yeah, I'm in another trading chat room. Like the Tigers Den, I'm in, and there's a lot of talk that a lot of stocks were halted this morning, so it wasn't just those two. So anyway, I saw it, and I figured I'd bring it to your attention. So
I appreciate it, man. I hadn't seen it. It was interesting. I was looking at it yesterday. I'm not sure if you heard talking about Peter Maroney on Yamana, and they have some acquisitions with Agnico E or a deal going through. But he was talking about in particular that there's a need for more deals in that gold market. So maybe that's one of those deals going through. We'll find out.
All right. Thank you, Tommy.
Thanks for the call, Mike. Have a good one, man.
Yep.
Folks, if you want to talk about anything, please, always, I don't say the phone number enough. Give us a call, 877-927-6648. Thanks for Mike for calling in, pointing that out to us. And yeah, something's going on, man. And until you know what's going on, I wouldn't touch it. Otherwise, you're just playing with fire. S&P's right now down by 20. Yeah, let's jump around to some of the other companies that have their numbers so far. And these I have on let's put it back to a 5-minute chart. So 3M, you're off 4.2% on their numbers this morning for 3M. Who else did we have out there? Was Lamb? No, not Lamb. Verizon with their numbers, they rebound a bit. Actually only off about 0.4%, and that's with a negative market right now for Verizon. With their numbers at 31.38 right now. And yeah, it's been quite a pullback for Verizon. You take a look at this thing longer term. I mean, even you want to see something on a monthly. All right, you are in this channel line, and what do? You break out of the channel line in September of 2021. You come back, you test that channel line almost 1, 2, 3, 4 times, and boom. That time that you really accelerate away from there, you're talking about trading from 55 to 40, and really 55 to 35 for a stock like Verizon. Quite a pullback for a company. I think they got to a PE ratio of 7.5 forward PE on their last number. I'm not sure how that changes this number, but guess what? That number changes if earnings keep going down, folks, and that's how sometimes it can really be to the downside. Let's see how Tesla's trading this morning. Up about 0.8%. We jump over to ARK. ARK up about 0.6%. How's Apple doing this morning? Look at this. We got all the big tech stocks. Apple positive, right? Microsoft ahead of their numbers, barely in the red. Amazon slightly in the green. And let's jump to Amazon. So Amazon, we have to finish this. You know what? We're going to finish this story first. So here, the Binance story, just to surmise what they're talking about here. So they have Binance tokens that they issue. They're Binance Peg tokens, B tokens. Those are currently stored on a single wallet called Binance 8, which also holds customer assets according to listings visible on its website. That wallet contains significantly more tokens in reserve than would be required for the amount of B tokens. So there's way more in reserves than would be necessary for the B tokens. That indicates that collateral is being mixed with the customer's coins rather than being stored separately, as has been done for other Binance Peg tokens according to their own guidelines. Binance 8 is an exchange cold wallet, so collateral assets have previously been moved into this wallet in error and referenced accordingly on the B token proof of collateral page. That's their spokesperson saying it. They're aware of the mistake. Nonetheless, folks, okay, it's bad enough when people are being purposeful actors, okay? These mistakes shouldn't be happening, number one. And even if they are happening, and even if they are a mistake, it's just another systematic risk, okay? So what if one of the systematic risks is it's a Ponzi scheme and they're taking all your money like FTX? Another systematic risk is the system isn't that good and they might mix them by accident, like is happening here in Binance for a period of time. Unless you really understand the dynamics of somehow the fundamentals in technology taking place, I'd say it's almost impossible to understand the systematic risk going on. The B tokens are supposed to be backed 1-to-1 by locked reserves of the coins they're based on, and reserves should be stored in dedicated wallets, as they say. But more than 40 of those are listed as using Binance 8 to store their reserves, and in that wallet you have customer funds going on there as well. All right, now jumping to Amazon. They're going to start a medication subscription service for Prime members, $5 a month. You have to be a Prime member to do this. It's got 80 generic medications is what it is. And was it on this one or was it on the CNBC? No, check out this statistic, which is interesting. Okay, approximately 150 million people are on at least one of the medications included in the initial RX Pass formulary, which is the 80 medications that they're talking about. So they're going big picture early. And this is on the heels that they just bought, which medical service? It's in here. Yeah, One Medical, right? The boutique primary care provider. They bought One Medical. They've also acquired PillPack in 2018. It's happening, okay? And this is, I'm biased. I have some Amazon, especially in retirement as well. But this is an area that is ripe for what they do, man. Something for the masses. There's no reason why you shouldn't have access to affordable generic medications. They do not offer insulin or specialty meds, It's not available for people on Medicaid or Medicare, and they're not going to talk about when they're going to expand that list just yet. But as I stated, 150 million people are on at least one of those. You know how many people are Prime members, and they are aiming to deliver, this is the Chief Medical Officer, Vin Gupta, a pharmacy experience is fundamentally different from how pharmacies have existed over the last several decades. Nonetheless, Amazon not going to react dramatically to that news, but big picture, you can see, PillPack, One Medical, prescription services, etc. Amazon flat today, S&P's off by 14. One more segment, folks. Stay tuned. Be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have Google shares down about 0.3% right now. Jumping around to some of the stories I have pulled up here. So the DOJ, they may poised to sue Google over digital ad market dominance as early as today. They're going to do it this week, the story says. That'll be interesting to see how it goes, man. All the conversation about Microsoft buying ChatGPT, maybe to put Google out of business, right? They do have some competitors, even though they've been a monopoly basically for 20 years. So interesting to see how that plays out. We have Microsoft with their numbers after the bell today, but we're going to talk about a little quantitative easing. Interesting story out here from Bloomberg this morning talking about the debt limit okay, and how that could impact the Fed and their quantitative tightening. Getting into the nuts and bolts of it, the Fed, they're shrinking the bond portfolio by up to $95 billion a month. You check out the numbers, their Treasury holdings in black here, the agency's mortgage-backed securities in red. Seems like we should get back to some form of normal, man. Those numbers way above where they need to be, probably contributing to the hot economy and inflation that we're dealing with. Now, what they get into here, and this is where, let's see. Here we go. When the Treasury draws down its cash pile and has to start restraining its sales of government securities later this year, there's going to be less Treasury bill supply for the money market. That means they'll likely need to park more in the reserve repo facility. What could then happen is the other channel affected by the Fed, quantitative tightening, bank reserves end up shrinking faster. All the cash is going to be put to work in the Fed's RRP facility, the reserve repo. And that's going to bring down reserves. And if the reserves get low, you could see some hiccups in the market. Another risk. Why not sprinkle it on top, man? S&Ps catch a little bit of a bid, though. We're back above 4,025. Thanks so much for starting your trading day with me, folks. Stay tuned. We got a man, Basil Chapman. He's coming up next. We have Steve Rhodes. We have Fast Market. You heard it, Fast Market. They're going to be talking about what? Microsoft earnings. After the bell today, we got Boeing with their numbers tomorrow before the bell. Boeing off about 0.5%. Look at that volatility on the open for Boeing. And they'll be talking Coinbase at 12 o'clock as well. Larry Pesavento at 1, Dave White at 2, Tom O'Brien, my dad, live from 3 till 4. Thanks so much, folks. Have a great one. Stay tuned for Basil. We'll talk to you tomorrow.